What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. Here's your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together we're breaking down this crazy real estate market. We got a great podcast for you. I'm going to let Angel lead it. It's about interest rates. But before we talk about interest rates, let's introduce the one and only Alejandro Medina.
There we go.
He's a buyer's agent on our team. He's one of the best in the business. Alejandro, good to have you.
Thanks for bringing me on. Finally.
There we go. Welcome to the podcast, man.
Have you ever seen his business card? He's like this, like he's ready to fight in his business card. It's the most hilarious thing, but it's a great brand building thing. And Alejandro, did you not have a TikTok last year that had over 2 million views?
Yeah, I had one that went crazy.
Ooh,
there we go.
Yeah.
Nice.
Mr. Viral. Mr. Articles and journals written about him.
There we go.
Yeah.
Was it really? Or?
Yeah, there was. Yeah, there was.
Crazy.
Mr. Alejandro Medina holding it down for the Luevanos
A few websites picked it up.
Yeah.
Bro. That's dope. I didn't know that. That's super cool. That's funny as hell.
So go ahead, Angel. Lead the podcast.
Alrighty. So a couple weeks ago, or a few weeks ago now, maybe about a month ago, we had Danny, who's my assistant, my partner. We did like a little quiz with Anthony going over appreciation. So we thought it'd be fun to have a similar podcast, but on the history of interest rates, right?
Okay.
Everyone's saying interest rates are so high right now. Everyone's saying that they never seen rates ever be this high, right? Just because we came off historic lows over the last year or two, right? Year or two ago, right? Excuse me. So what we're gonna do today is we are gonna do similar format as we did about a month ago for that podcast, where I'm gonna quiz you guys on interest rates. We're gonna just do it from 2000 till today. So I'll ask them, guess the average interest rate for a year. Mm-hmm. So I'll say, what's the average interest rate for the year 2005? They're gonna guess it. If they guess within 1% of that rate, we'll give them $1. If they guess within 0.5%, we'll do $5. If they guess within 0.25%, we'll give them $20. And if they're within 0.05%, that'll be the $100. Okay. So I only have $100 bill here. We'll see how it goes. Hopefully it lasts a while.
Papa's hungry.
Before we go into the quiz, I just want to break down the history, right? I have some data here from Freddie Mac. And they really go over the history from 1971 to 2022. And the average interest rate over that span is 7.77%.
Wait, say that from what time to what time?
From 1971 till 2022, the average 30-year fixed rate was 7.77%.
Wow.
Right? So everyone's saying interest rates are high. I just checked the average rate today, which they did go up quite a bit today. It was 5.48% as of this morning. And we're filming this at 9 a.m. Wednesday. What's the date today? This 18th? 17th, right? And yesterday it was 5.24, so it was even less yesterday. Just rates are fluctuating like crazy right now. But anyways, just get you an idea where the rates have been, what the average rate was over the last, 30, what is that, 50 years?
Since 1970, 52 years now.
Around there. So let's go ahead and get into it. Pick a year. Who wants to pick a year? You guys can start off. You guys pick the year.
So you said the first year that we can start is 2000, right?
2000.
Let's just go there. I want to hear what 2000 rates are.
Perfect. So let's go over the average 30-year fixed for the year 2000.
I'm gonna guess around 5.2%.
5.2.
Go with 6.1.
6.1.
We're getting no money. We're gonna give no money out today based on those first guesses right now, because the average 30-year fixed rate was 8.05% in the year 2000, guys.
Man.
So no money for neither of these guys right here.
Get it together,
Alrighty,
bro.
Alejandro, your turn. Pick a year.
A year 2005.
2005. Alrighty, you go ahead and guess first.
5.8.
5.8. Okay, go ahead.
7.1.
7.1. Alejandro, you were really close to getting $100 right now. It was 5.87. So you're a point too off. So, but you do get $20. So great guess right there. Let's pass that over. Show him that.
Damn.
I don't know the last time I got the president wrong. What was this? This is Andrew Jackson. Andrew Jackson, right?
Got one.
Well, let's see if someone can get Mr. Benjamin today.
Let's do it. I'm ready.
Alrighty, so we went 2000, 2005. Now let's just jump to 2010, right?
Okay.
So 2010, what was the average 30-year fixed interest rate?
I mean, that was in the midst of the recession. The economy was being stimulated. Interest rates were lower than usual. I would say 4.3.
Okay.
We'll go with 5.3.
5.3. So Anthony was close. It was 4.69.
Ooh.
So you're within 0.5%, which will get you
5. I get a 5.
a $5 bill. Congratulations. Alejandro, you're within 1%. So you'll get $1. There you go. $21 right now for Alejandro leading the way. Anthony has 5. Alrighty.
Let's go.
Now let's jump something more recent. 2020.
Okay.
What was the average 30-year fixed rate?
So 2020, again,
Historic lows.
down market, stimulating the economy, lower interest rates. I'm going to say the average fixed rate was about 3.1%.
Okay.
Go with 2.8.
2.8. Anthony, right on the money. 3.10. Right on the money.
Let's
There we
go.
go. We have the only Mr. Benji out. There we go. Alejandro, you're still super close.
I would have gotten them
What'd you
all
get?
correct if I was a realtor
2.8.
before.
I think yeah, 2.8.
2.8.
Yeah.
Yeah.
So we're at
3.1. So
3.1.
it's a 5.
Get a 5.
There we
You
go.
have a lot of ground to make up right
Can't
now,
even
Alejandro,
catch.
if you want to win this round.
Buddy.
Sheesh.
Alrighty. All right, let's get away from the 5s. Let's see. Let's go. What year did you graduate high school, Alejandro?
2011.
2000. You too, right, Anthony?
Yeah,
All right,
2011.
both of you. All right, what's the average 30-year fixed that year?
2011. I would say it's going to be in the high 4s. Maybe like a 4.99.
Okay.
Man. I was thinking 4.9 also, but I don't want to be the same. 4.8.
4.8. Okay. You guys are both pretty close. It was 4.45.
Oh,
So
that's
that
even
keeps
lower.
you out of any. You get $1. You get $1.
no, no,
Anthony.
it's not within a percent though.
Yeah, it is. You said 4.9. It's 4.45. Then 1%.
Come on, bro.
And then Alejandro, you get another 5. You're catching
There
up.
we go. There we go. I need some 20s.
But you're not within a quarter.
some
There we go.
20s.
I need
bro.
some 20s.
Almost
Some
within a
20s.
quarter.
Let's go.
We do need some 20. You gotta get within that
I don't know.
0.25%.
I got lunch already, so I'm happy.
Let's go 2015. I want to hear
All right.
this. I graduated from UC Santa Barbara and then go Gauchos.
We went over 2015, didn't we? Or we jumped?
No, we didn't go over 2015.
All right, well, let's go over 2015. That's the year I graduated high school. So let's see. Go ahead, guys.
2015. Again, we're seeing this trend. Interest rates are going down from 4.7, 4.8, 2010. So I'm saying like a 4.3.
Go with 5, straight 5.0.
All righty, it's 3.85.
Dang, you know what? I was working at a bank then too.
That's low.
Oh man, I don't know how I didn't know that.
yeah,
I was a bank teller in 2015.
All righty.
That was him. That was him, right?
What'd you say?
No, you said 5.
Yeah, I'm
bro.
like, you gave me
off my bill, bro.
You gave me your $1, bro.
No. That stays with Anthony.
Yeah, well, I just gave me $1.
Let's go back to the 2000s now. Let's go with 2006. 2006.
Okay. 2006. Interest rates were a lot uglier prior to 2010. I would say it's probably about 6.1.
I'll go with 5.5.
5.5, 6.1. Anthony, you were pretty close. 6.41.
6.41.
So that puts you in the $5 range, right? Yeah.
Yes.
$5 range. Alejandro, you still get $1. Progress. There we go. Alejandro came out swinging, and then
We did.
I don't know what's happened since, but
We did.
it's all right. It's all right. This is definitely not an easy guess.
It's not.
Yeah.
And as you guys can see, interest rates have been all over the place over the last 21 years right now that we're going to be going over.
And you'll also notice that interest rates were a lot uglier back then, and they've gotten better decade over decade. And more recently, 2020, we saw them at historical lows, 3.1, which I would imagine that's the lowest, right? 2020, or was it 2021 the lowest?
2021, I'm not gonna have them guess this one because it's so close to 2020. It was at 2.96, so less than 3%.
Wow.
30-year fixed rate. So,
wow. Is there an average that you have for this year? Is that already come out or not yet?
That hasn't come out. This
imagine.
is the end of the year totals because again, how we go on the podcast when we go over market updates, we don't want to go over month. We want to go over at least a year span, right?
Yes.
To really get an idea. And then again, this is from Freddie Mac. So Fannie Mae's can be a little different, but it should all be in a similar ballpark, right?
Gotcha.
So that's one thing to keep in mind. But at least it gets us the idea of where rates were at, where rates over the last 10 years been, the last 20 years. And we're gonna have a fun one right now. We're gonna throw it in, and I'm gonna give you guys a hint, okay? We're gonna do the interest rate. You guys were both born what?
93.
93, okay.
You're the rooster.
Year of the rooster. All right, we want to keep it in double digits. So I'm going to do a year. It's double digits this year, okay? This is the highest that we've seen interest rates, the highest average we've seen since 1974. So we're going to do the year 1981. Guess what the average 30-year fixed rate was that year?
Oh, was
It's
that
double
the
digits.
year?
81.
Was that
Double
the year
digits.
that Paul Volcker was Fed chair?
Well,
I don't know any of that. I don't know.
Because
I'm going with
hiked the rate.
14%. I'm going to go with 14%.
Yeah,
14%?
I'm
It's
gonna go with
ugly.
14.
It's. I want to say 14's nice, man. I want to say
Yeah.
13.8.
Those are good guesses, and I don't think anyone would guess this one because can't believe it was this high. It was 16.63%. 16.63%. And to be honest, the 13%, 14% were very common prior to 1984. It was almost 1984 from 1980 to 1980. Let me see. 1979 to 1990, it was double digit average interest rate.
Wow.
So that's crazy. And then other ones were close at 9.6, 9.8. So
Wow.
very, very, considering our interest rates now, nowhere near that, right? And hopefully we never see those rates again. But yeah, let's just go into a couple more and we'll wrap it all up. Let's do 2000 and let's see, 2008.
2008. Oh, so right when the recession started.
Right when the recession started.
I would imagine that interest rates are starting to come down at this point. So I would say probably like around 3.7. 3.7.
Go with 4.2.
So you guys are both pretty off, to be honest. It was at 6.03%.
What?
6.03%, guys. So, yeah, I get where Anthony's logic was on there, but I guess they hadn't have dropped the rates yet at that point. And we actually hadn't seen 3% interest rates. The first time we seen them was in 2012, and that was the first time ever that we averaged a 30-year fixed interest rate from 1974 to 2001. This based on this data, the first year that we hit the 3% was in 2012.
Wow, 2012.
Yeah, 2012.
So, Angel, I think we should try to wrap this up in a way where we tie in interest rates and how they started to get a lot better, especially 2012. That's when you mentioned they hit 3% for the first time. Right. And then have fluctuated from 3%. I don't think they've ever reached higher than 5% in that time frame. Right.
Correct. So from 2012 to 2021, the highest average interest rate we've seen was 2018 at 4.54%.
Yeah.
2022 will most likely be higher than that, probably hit about 5% or so.
Yeah.
So we will see it will be the first time that an average 30-year fix is at 5% since 2009.
Yes.
Right? Wrapping it all up, how Anthony said, The main goal of this podcast today was just to show you guys that historically rates change, right? And that we're not always going to have definitely not going to have interest rates below 3% average. I think I don't know if we'll ever see it again in our lifetime, to be honest, where we see it, interest rates below 3%. And with that being said, a lot of these rates where they were low over the last decade or so, was we're coming out of a recession. It helps stimulate the economy, get the housing market back on track, because for so long people were scared to buy houses, right? Because of all the foreclosures and short sales. So with the low interest rate, it really intrigued people to want to buy a house, right? And want to see a property as a secure investment, because for many years they saw it as a very risky investment. So that I'm sure was a big driver as to why interest rates were in the 4% or even lower over the last decade or so, excuse me. But yeah, I don't know if you want to add anything to that, Alejandro or Anthony.
Yeah, I think the biggest thing that I want to add there is, like Angel mentioned, this might be the first year that we have interest rates in the 5s. And I don't, and many of us don't expect interest rates to stay in the 5s for very
Definitely
long,
not.
right? Once inflation starts to cool down, right? That's the key word. Once it starts to cool down, then we will likely see interest rates finally drop back down again, because, okay, it's time to stimulate the economy. It's time to get things running again. And once interest rates drop back down, that indirectly affects mortgage rates, but usually it's going to bring mortgage rates down as well, right? And then when mortgage rates drop down, you're going to see the biggest pool of buyers, which stood on the sidelines for this last 6 months because interest rates are so high, they got priced out, which is first-time home buyers. They're going to re-enter the market. Now, when they re-enter the market, two things is going to happen. Number one is you're going to see much more demand for homes. And number two is you're going to see them qualifying for a lot more, now bidding more for homes. So anyone that owns property will likely see their home values skyrocket, because now the neighbor's home across the street, which is an identical home to yours, just sold for $100,000 more, right? So if you're able to beat that rush, then that might be the best case scenario, especially if you're a home buyer that's coming in with less than 20% down. If you're coming in with, the FHA loan at 3.5% down, or the conventional loan at 5% down, and then you beat that rush before interest rates drop back down, well, hey, now that the home across the street sold for $100,000 more, that means that your home is now worth $100,000 more. That's more equity you have, and you might find yourself in position to remove mortgage insurance and at the same time drop down your interest rate, and that makes your payment $1,000 less a month, right? Or something similar to that. And this is exactly what happened to several of our clients in the beginning of 2020, where for a while there was indecision. For a while, people didn't know what to do and they weren't looking at homes. But the few people that did end up buying homes in the beginning of 2020 were able to realize significant equity gains because the interest rates dropped so low and we saw that huge buyer frenzy, right? And I had buyers who literally purchased with 5% down, and then within a year had over 25% equity. I mean, it was absolutely crazy, right? So it's just something that I wanted to leave here for you all.
No, I think great points right there to kind of bring it all together. These aren't things that we're not just giving you statistical facts. We're giving you real life experiences, right? With clients that we have helped and these things actually happened, right? We're crazy appreciation and people benefiting and leveraging their house, right? Owning a property, you can potentially, again, Anthony said, refinance, make your payment lower, cash out, refinance. Rates, I think, are going to get better. I've been predicting this on the podcast all year long. I think by the end of the year or beginning of next year, we should see rates back. Whether that's the low 4s, maybe the 3s again. But I don't expect, again, these 5% interest rates. As you can see over the last decade or so, has never happened, right? So I don't assume that trend to continue to get higher over the next year or two.
Yeah. And then Alejandro, is there anything you want to say, like for buyers right now? Like what's the biggest advice you give? Because Alejandro, he shows so many homes and he has some insight because he represents buyers that maybe some of us might not have. So is there anything that you
Yeah,
would
so
say?
I'm seeing maybe 10 to 20 homes a week. So going through the listing, seeing what the sellers are offering. And just in this last 2 months, I'm starting to get a lot of the sellers' agents calling me back, asking me that my buyer liked the home, which back in 2021, it was hard to even get a listing agent to answer your call.
Yep.
So anybody that was out there knew, like, you cannot get a call unless you were like cash buyer.
Exactly.
So now it's the opposite. The listing agent is starting to call us, the buyer's agent, asking us if we're interested.
Yep.
They are offering to buy the points down for the buyer even. They're offering to give us seller credit to the buyer in order to help him qualify for the home or get a better payment. So they're just being extremely flexible as far as helping out the buyers to get into the home.
And how many price cuts have you been seeing in the market when you're going through MLS?
Tons. I just saw a price cut yesterday of $80,000, which was a huge price cut.
We would have never seen that 3-4 months ago.
Yeah,
$80,000 price cut.
Yeah, you would not see any price cuts. If you saw one, it was because somebody made a mistake. that was the only reason you would see a price cut.
Yeah, exactly.
Like, you would never see a price cut. Everything was selling above asking, waiving appraisal. Yep. Now you could actually, if you don't have the full down payment, you could get a little bit of help depending on the situation.
But I also want to reiterate something, and I think Alejandro can testify to this, is even though it's a lot easier than it was 3-4 months ago or last year or the year prior to that, correct me if I'm wrong, there's still, if the home is priced correctly, there's still multiple offers on the property, right?
Yeah, as long as the home is priced correctly, the homes are still selling quick. It's still a seller's market.
Exactly.
You're just not waiving appraisal, trying to go as quick as possible.
Unless it's still multiple offers, but not, because literally there's 100 offers sometimes on properties.
Literally. Last year, it was multiple times homes had over 70 plus offers.
Yeah.
Now you're probably competing against 3 to 5 strong offers. 3 to 5 strong
offers, exactly.
So it's still a seller's market, but it's just not as crazy as it was last year.
So that's why it's important right now. I don't work with sellers. Obviously, these are the people that could help you with that. But it's important for you sellers to work with the right agent. That's gonna right sellers to work with the right agent to price your home correctly, to market your home correctly, and to get the exposure out there, guys. Because if you just hire an agent and they're putting your property above what the market is asking for right now, it's going to sit for weeks, potentially months. Price cuts will happen. So for you sellers, make sure you're partnering with that right agent that's going to make sure your home gets sold in a timely manner.
Absolutely. And if you have an agent that literally took his iPhone out and took pictures, that's a bad sign. Okay. Like I'm tired of going through the MLS and seeing these homes with iPhone pictures that look like they were taken from a Razor phone, like it needs to stop. Yeah. So it's just something to keep in mind. But that was a great podcast. It's very insightful. I mean, I've only been a realtor active now since 2019. So there's a lot of this that I didn't really know, about the history of interest rates. So thank you for setting that up. Thank you, homies, for joining us. Another great podcast. Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. Alejandro?
At Alejandro Medina Real Estate on Instagram.
Where he fights for his clients.
At Alejandro Medina Real Estate on Instagram. You know where to find us. At the Luevanos Group. If you haven't already, please subscribe to our YouTube channel. And with that said, peace out, homies.
Thank you. Hey, homies, it's Angel from the Homies Real Estate Podcast. This podcast contains our opinions and is for educational purposes only. It does not guarantee any projections and should not serve as the basis for any purchase or sale in real estate.